Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through our live mortgage rates, and then we are going to do a deep dive into profit and loss loans. Great topic here to go over. Great tool to have in your arsenal as a loan officer. Go ahead and drop a comment there in the chat. Just waiting a few seconds here to go live on all the different platforms. Appreciate those tuning in nice and early. And it looks like we are good to go. So we'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. Drop any questions that you have in the chat as well, and we'd be happy to answer them. All right. So welcome, everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We're a lender that specializes in non-QM loans. And what we do every morning on the show at 11 a.m. Eastern is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type is going to be profit and loss. I'm sure Jose will have some great examples here of how we can use this as a tool as loan officers and how our borrowers can benefit from it. So let's go ahead. Before we do that, let's go ahead and pull up our live rates. So Nick, if you're ready, let's check out our rates today and see what they're looking
like. All right. So before we pull these up, we're going to compare all the live rates today across all the programs so we can compare the APRs. It is June 26th, just after 11 a.m. Eastern. So all of our standard programs are live here. So we can compare. If you'd like a full breakdown, an itemized loan estimate that itemizes all of the fees that go into the APR, please get with our team members. They would be happy to help you out. For these demos, we're going to set up a same scenario so we can compare a standard single family home, $500,000 purchase price, $400,000 loan amount, corresponds to 80% loan to value, 20% down payment. And we'll use an estimated 760 credit score and an estimated 40% debt to income for all these demos. So let me go ahead and share my screen and we will check it out. And the first option for most customers is a 30-year fixed conventional for a primary home. That's the typical loan most people think of when they think of a mortgage. Rates today for a standard conventional loan come in at 6.49 rate. Final APR 6.828, which is right about the same as it was yesterday. And if for any reason our customers don't qualify for a conventional option, typically the next option we want to present is an FHA option. FHA allows more leniency on credit issues, as well as a higher debt to income ratio, but it does have upfront and yearly mortgage insurance that is required. Rates today for FHA come in at 5.625. And the APR with all the fees, 6.606. Excuse me. And remember, if our customer qualifies for both, FHA could be a touch cheaper, but does require that mortgage insurance. So definitely recommend our customers check out both if they qualify for both. Now, for our eligible vets and active service members, we have our VA programs, which are amazing. Rates come in today. 5.875 and a final APR 6.183 with a standard funding fee. So for our eligible vets and active service members, definitely take advantage. Notice when you compare side by side here, it beats FHA and conventional substantially. And scrolling down here to our final agency government option, we have USDA programs. USDA is only for homes in a USDA eligible area, typically a rural area. If our customer and the home is eligible, definitely a good program to check out. USDA comes in at 5.75 and the final APR 6.5 with all the fees. So notice for our customers shopping in those areas, they'll probably be comparing an FHA, which USDA beats a little bit, and a conventional, which USDA also beats. So definitely a good option for our customers looking in those areas. Now, if our customer doesn't qualify for any of the standard programs here, many other banks or lenders will have to deny them. But that's where we love to present our other options, starting here with our 30-year fixed non-QM alt doc for a primary home. So if our customer doesn't qualify for conventional or anything else, many other banks will have to deny them. Here we can use alt docs such as bank statements, 1099s, P&Ls, asset related, all kinds of different options. And this option here, probably a bank statement or similar, 6.99 rate, final APR 7.309. Notice it's within half a point of conventional. So our customer that can't quite qualify conventional, needs to use different docs, still within a half a point, very reasonable there to still qualify for that home. Now to use alt docs for an investment property, 30-year fixed non-QM alt doc investment would be bank statement or similar. We come in at 7.375 rate today. Final APR 7.705. But we'll want to compare this to all the other investment property options. Next up is our conventional option. There are no government options, so no USDA, VA, or FHA for investments, but we do have our conventional option here. Rates as low as 7.375. Final APR comes in at 7.740 today. So notice that's actually a touch more expensive than alt block today. They've been kind of flip-flopping, but definitely recommend our customers for investment properties. Check out our favorite programs, the DSCR. DSCR stands for debt service coverage ratio. No income, no employment needed. We simply use the estimated rents to determine a DSCR value. If the estimated rents can cover the expenses, aka the property cash flows monthly, that's a ratio of 1 or higher. For all these demos, we put a ratio of 1.5 so that we could see all the programs. First up is our 3-year prepayment penalty option. Rates come in at 7%. Final APR 7.342, which beats conventional. Absolutely amazing. And our investors that are willing to add a 5-year prepayment penalty, some programs allow it, to get even lower rates. 6.75 rate. Final APR 7.072. And some states and some investors don't want a prepayment penalty. We do have those options. Rates for no prepayment penalty come in at 7.5 today. Final APR 8.008. So notice that's a touch higher than conventional if our customer doesn't want to prepay. Still recommend our investors use this option, but if possible, add the prepayment penalty to sweeten the deal. And our final 2 options here, very popular requests and new program, 30-year fixed second mortgages. So a lot of customers have a low rate first mortgage and do not want to have to get a HELOC to get cash out. HELOCs are a little higher rates and variable. So we have a 30-year fixed second mortgage, rates as low as 8.75, final APR 9.189, and that is a fixed mortgage to get cash out and not touch the first mortgage. These are also non-QM, so we can use bank statements and similar. And for an investment property, 30-year fixed second mortgage to get cash out, not touch the first mortgage, rates as low as 9.875, final APR 10.185. When you combine these with the rates of the first mortgage, usually it gives our customers a benefit to just get a new second mortgage rather than refinancing the first. So very cool options. Let me go ahead and switch the screen again. And we'll get into today's topic. So when we do the live demo, we always look at our non-QM options. And typically the bank statement option is going to be one of the cheaper options that you see there cited on my live demo. But we do have all kinds of cool options, profit and loss being one of those key tools for our loan officers to use when it is needed. So Jose, let's talk about when these options are utilized, and then let's check out some of the live rates specifically for this set of non-QM.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. The profit and loss loan is an amazing loan option because essentially it allows the borrower to qualify, the self-employed borrower, should I state, to qualify simply on a profit and loss report generated by their accountant who has been reviewing their financials for at least the last 2 years. No tax returns need to be provided, and the profit and loss report is not an audited report. Now, the profit and loss is a great workaround tool for bank statement loans gone sour, or basically for a file that just does not fit the parameters of a bank statement loan because of several issues like declining deposit trends, negative or very low ending balances, unverifiable large deposits, and NSF and overdrafts. Now, these are not the only issues that where a profit and loss will save the deal or will be the only way to get the deal done better, because you don't really want to start it as a bank statement loan when you really should have analyzed the file structure a little bit more in more detail at the onset and to get your loan off on the correct trajectory. Because you know what happens if you get off on the wrong foot and it's a purchase loan, for example. When you find out that it's not going to work, you may not have time to pivot to the correct option. So let me share the profit and loss options for you today. Now, our profit and loss loans are non-QM loans, and as always, non-QM maximum LTV is 90%, and never any mortgage insurance applicable on any non-QM loan. Excuse me. So our first option here is for a primary purchase at a 90% LTV. Our lowest cost option, 10% at a cost of 0.25 points. And you can buy that down all the way to 8.625% for our maximum LTV, 90% LTV primary purchase. So now let's add a little context to the situation. I always like to drop the LTV a little bit on each option so that we can see, you know, at the 90% maximum, obviously we're at the extremes, rate's going to be a little bit higher. But notice now we bring it down just 5% to 85% LTV, and now all of a sudden we're at 8.875 at par, as opposed to this option here, 8.875 is costing you 1.9 points. And best news is you can buy it down all the way to 7.75%. We're talking conventional loan rate range right there. And now our low credit score option, 600 credit score, we can actually take this loan down all the way to a 600. Profit and loss, primary purchase, 75% LTV. 11.375 is our lowest cost option at par, costing 0 points. And you can buy that down all the way to 10.25% at a cost of 2.275 points. And now let's go with some investment options. 85% LTV is our maximum LTV for this profit and loss investment purchase, which is pretty amazing when you consider your conventional options are usually going to max out at 80%. So here we have 9.124 is our lowest cost option at par. And you can buy that down all the way to 7.499. And you will note you can buy the rate that you can buy it down to on the investment a little bit better actually than the primary. And that's because not only is it 5% lower LTV at the max, but here we have a 5-year prepay, and the 5-year prepay does definitely allow the rate to be much lower. So this is for our maximum LTV profit and loss investment purchase. Now, check out these rates. When we bring it down to 80%, we drop it just 5% from the maximum LTV to a more standard 8%. And check that out. Now we are definitely competing with our conventional loans here, right? We're at 8.25% is at par. And we can buy it down all the way to a recently unheard of 6.875% for our P&L 80% investment purchase. Non-QM is definitely picking up velocity in all these volatile times. So now we have our investment purchase with a 600 credit score. Yes, this is not a typo. 75% LTV again is our maximum LTV for our investment purchase. 75% LTV with a 600 credit score. And 11.25 is our lowest cost option at par, costing 0 points. And you can buy that down all the way to 9.625% at a cost of 3.275 points for our lowest credit score option, 600 credit score, 75% LTV investment purchase. And let's check out some refinance options now. This is our primary cash out refinance. 80% LTV is our maximum LTV here. And you can buy that, the lowest cost option at 0 points cost at par, 8.499. And you can buy that down all the way to 7.375 at a cost of 2.4 points. Excuse me, 7.125 at a cost of 3.15 points. And our profit and loss 1 unit primary cash out refi, 75% LTV. Again, they let us go to 75% even on the cash out for the 600 credit score option. 11.499 is our lowest cost option at a cost of 1.275 points. And you can buy that down to 10.999. Don't forget the last 9 at a cost of 2.275 points. That's our primary 600 credit score option. And our investment 1 unit cash out at the maximum LTV, again, of 80%. And look at these rates, right? 8.499 is our lowest cost option at par. And you can buy that down all the way to 7.125 at a cost of 3.15 points for investment cash out refi at an 80% LTV. And our last option here is, again, our minimum credit score option. Again, the beauty of this is 75% LTV max for purchases and also 75% LTV max for the cash out refi, even for an investment property at a 600 credit score for a P&L loan. Unheard of. 11.499 is our lowest cost option, and you can buy that down all the way to 10.375%. For our last option here, our P&L 1 unit investment cash out refi, 75% LTV, 600 credit score. That's a mouthful. So definitely look to the mortgage calculator to structure and close all of your P&L loans, as well as any other non-QM loan options that you may have. Bank statement, 1099, full doc closing in an LLC, DSCRs, DSCR short-term rentals, and even DSCR for properties that are cash flowing below 1.
All right. Thank you, Jose. Looks like we do have one question here. The question is, what is the expense ratio and how do you calculate it, Jose?
Oh, there is no expense ratio for a P&L loan. It's not like a bank statement loan or a 1099 loan where they have certain expense factors, like the 1099 loan we went over recently. That was a 10% expense factor. Bank statement loans, the expense factor is going to vary. Could be anywhere from 20 to 50%, depending on the business type and depending on the option that we chose. But for a P&L loan, it is based on the report, on the actual profit and loss, right? The accountant is going, the profit and loss report is basically a compilation report of income and expenses. So the expenses are stated on the report, the income is stated on the report, the net income on the report is what is used to qualify the borrower.
All right. I don't see any more questions, so I think we can go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we will be back tomorrow with a new topic. We appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live.